The question is the House do now adjourn. I call the member for Dawson.
Thank you very much, Madam Speaker. On the morning of February 15, 2008, a disaster was unfolding in Mackay, North Queensland. An extraordinary amount of rain fell in a 6-hour period in what was later described as a 1 in 200-year flood event. It resulted, obviously, in widespread floodwaters ruining homes across the city. Again in 2011, North Queensland has suffered disaster at the hands of Cyclone Yassi, the worst cyclone to hit Queensland in almost 100 years. But the disaster unfolding in North Queensland today is no less of a disaster than those two events. The insurance disaster choking North Queensland this year is the unreasonable and unconscionable actions of insurance companies to whom the Gillard Labor government has given free rein. Whether homeowners want it or not, whether they need it or not, they are having outrageously expensive flood insurance thrust upon them. Homes in West Mackay and Home Hill, $1,700 last year in premiums to more than $3,000 this year. In Mackay, QBE's premium increase went from $135.73 a month to $253.38 per month, an 87% increase. But they're the lucky ones, Madam Speaker. An Allianz home and contents insurance premium in Andergrove went from $94 a month last year to $356 a month this year. That's almost a fourfold increase. The premium for a Mackay home went from $1,992 last year to a price-gouging $8,133 this year, more than triple in a single year, and that's for a house that didn't even flood in a 1 in 200-year flood event in 2008. A two-bedroom Mackay house, $2,642 last year, premium up to $13,616 this year. The owner hasn't paid it because she can't find that much money. Homeowners are considering dropping cover altogether, but unit holders are compelled by law to have strata title insurance. A set of units in Bowen has seen their premiums rise from $6,668 in 2009 to $48,000 in 2012, with the cyclone excess rising from $100 to $10,000. Mark Faulkner has a property in a 5-level residential building in Mackay, where the insurance premium went from $25,000 in one year to $102,000 the next. There is also the bizarre case where Mackay resident Karen Levy is wondering what her insurance premium bill will be when it arrives in a month's time. In the past 3 years, her insurance bill has risen from $600 to $1,100, then to $2,200. And what's that for? It's for a shared driveway, just a driveway. What is a greater disaster in North Queensland is a complete market failure. When we are seeing homes in Townsville being charged premiums of $20,000 and a home in Ingham charged $26,000, we have market failure. My colleague, the member for Leichhardt, reports of a guest house that cannot get insurance at all after 13 rejections, and the bank is now asking them to show cause. Faced with a 324% insurance premium increase for C-Star apartments, with Sunday resident Margaret Shaw, who lives there, sought alternative cover from QBE, AMP, CHU, Chubb, QUS, Zurich, Allianz, Wesfarmers Lumley and Vero. None were prepared to quote for North Queensland or for properties of that value, except for Vero, who offered the same ridiculously high premium as SUU, but with a $100,000 cyclone excess. The House of Representatives Standing Committee on Social Policy and Legal Affairs held an inquiry into strata title insurance last year. Shamefully, the only recommendations the government adopted was one that handballs the problem to the state government, and the other thing they adopted was the commissioning of a government actuary report on insurance in North Queensland. The report they did, though, was nothing more than a regurgitation of the Insurance Council of Australia propaganda that has failed to fool North Queenslanders who have had their budgets gouged by insurance companies over the past 2 years. The report says, basically, I've not found that insurers have been price gouging. Well, my response back is because you did not look. Responding to the report, one of the tireless workers in my electorate on this issue, Lester Riley, wrote, "You have totally misrepresented the situation existing in the actual marketplace. The phrases used in the report have been all heard before from the insurance companies, but that does not mean they are truthful." Lester is a self-funded retiree, and he says, "I'm watching my life savings and the value of the property I live in continue to decline at an alarming rate." Lester and Margaret Shaw have proposed further ways for the government and insurance companies to solve this issue, and one of those is something the government didn't implement, which is the expansion of the Australian Reinsurance Pool Corporation that John Howard set up to avoid market failure for terrorism insurance in the wake of the 2001 terrorist attacks. The government didn't want to use the fund to avoid market failure in North Queensland, but as my colleague, the member for Herbert, points out, it didn't stop the
The question is the House to now adjourn. I call